Alright, so what's good everybody? So in today's video, I want to share with you guys my strategy that I'm currently using this year of 2024 to trade the Forex and the C market every single day, right? So in this video, I'm going to go into more details, pretty much explain to you guys literally what I have written down here. I don't know if you guys can see it, but literally what I have written down here, I'm going to show you guys what is my trading style, what time frame do I trade, my risk management, explain my trading strategy, into technical, and then show you guys my exit early strategy, psychology, all of that good stuff that you guys obviously want to know. Now, in the Forex market, stock market, crypto market, whichever market you guys are trading, right? Every single trader is going to have their own trading style, their own trading strategy, right? One thing that I like to say a lot is that nobody is right or wrong with the market, right? I might be wrong by saying that, but what I do believe is that nobody is right or wrong with the market, right? If something works good for you, you guys want to stick with that, right? So if this person has a strategy that it works for him, but it doesn't work for me, I'm not gonna go and try to like force something that's not gonna work for me, right? Just because I see this person making money, right, and I've tried his strategy and it's not working for me, then why would I do something like that, right? Pretty much you want to find out what is your trading strategy. In this video, I'm gonna share with you guys my strategy. I'm not saying you guys need to copy my strategy because it works for me. Maybe it can work for you guys, maybe it won't, right? But that's pretty much how this industry works. Everyone's gonna have their own trading strategy, right? So you guys are gonna go and copy this guy's strategy because he's making money, or this guy because in this and that, right? I do believe all of that is literally nonsense, right? A lot of people do talk shit saying that, hey, your strategy is trash because of this and that. Literally, what works for you, you guys want to stick with it, right? So in this video, I want to get into it. Like I said, I'm not saying that my strategy is good. I'm just gonna show you guys what it has been working good for me. If you guys like it, you guys like it. If you guys don't, you guys don't. Simple. So let's get right into it, guys. All right, so we're gonna go into what is my trading style, right? Now you guys already know that there's many trading style in the market, right? You got scalper, you got day trading, you got swing trader, right? Now a scalper is a trader that goes into the market and trade for a certain time amount, literally a short-term period. So they can literally go from the 5 minute, 1 minute, 2 minute, however they trade. They go into a market, they look for a specific move that lasts literally no longer than 10 minutes, right? They simply enter a trade in and out. They take the W or they take the L. You have a day trader that usually enters a position that they may be holding for the couple hours, maybe throughout even the end of the day, right? Which is pretty much what I am. You have a swing trader as well, which is a person or trader that enters a market and they be holding the trade for at least 2 to 3 days, maybe throughout the even weeks, right? It can literally take them a longer project, which is a longer term project for them, right? I would say that I'm a swing trader because there's some time that I do be swing trade, right? It really depends on the setup that I'm looking for. Since I have stopped trading Forex pairs, right, and I just mostly focus on GJ, US 30s, and gold, right? I've really stopped trading every other Forex pair. This is literally the only ones that I focus on, right? I do day trade, right? I day trade gold, day trade GJ, and day trade US 30. So that's my trading style right now. Like I said, there's gonna be some time that I do swing trade. Maybe I do swing trade gold that might take 2 to 3 days to have the longer term project where I'm waiting for price to come into, etc. Same thing with US 30. But like I said, mostly what I focus on is just on day trade. All right, so moving forward, which is what trading session do I trade? So obviously you guys know there's different trading session in the market, right? You got the London session, which is from 3 a.m. to like 12 p.m. in the afternoon. You got the USD session, the New York session, which starts from 8 a.m. to 4 p.m. afternoon. We're mostly 5 p.m. when the market just closes for like an hour and then reopens. You got the Sydney session, and you also got the Asian session, right? The trading session that I trade mostly focus on is the London and the New York session. Now, probably you guys are gonna be saying like, hey, you pretty much stay up the whole night just to look for trades. No, so obviously it really takes time, right? To obviously you guys build a habit. So I usually, I sleep early now. I really changed my whole entire how do you say that fucking word? My schedule, right? I changed my schedule. I go to sleep around pretty early, like I'm a fucking boring guy, but obviously you guys gotta stick what you guys want, right? You guys want to focus on the future. You guys want to focus to build yourself. You gotta stick into a plan, right? So I usually go to bed from 9 p.m., 10 p.m. Depends on the days too, right? There's gonna be days that I probably come home late from going out or some shit, but mostly want to focus on go to sleep early. Wake up every single day at 4 a.m., right? So 4 a.m. is when I start trading the London session. Just usually go into GJ, mark up the chart, and just wait for a specific move to happen, right? So I'll just be up from 4 a.m. all the way, obviously, to the next day. But that's what I do. I start my day from 4 a.m. I trade the London, the New York session. I do obviously go to the gym. I do shit that I have to get done, work with my brand, trade with the VIP members, all that stuff in the morning, right? Which is pretty cool. But yeah, so those are the sessions that I traded, just the New York and the London, right? Now, like I said previous, right? this session probably not work for you. It works for me, maybe not works for this guy or this person, etc. But you guys really need to find out what trading session you guys work. If you guys trade the USD session, cool. You guys mostly want to focus on the New York session. If you guys are trading the GPP and the GBP pair, which is JPY, or the GBP USD, whichever, GBP obviously from the London, you guys want to focus on the London, right? So that's the session that I trade into. All right, so the next question is, what is my risk management? What am I willing to risk, and how do I manage my trade? So we're gonna get into math, and we're gonna get this done in less than 5 minutes. So very simple. What am I willing to risk percentage wise? So I'm willing to risk 0.5%, right, to 1%. That's exactly what I focus on every single time. Now, let me show you guys a trick that I've been using for the past 2 years that has helped me fund the challenge and also maintain my live account as well. Obviously, I am not the creator or the founder of this trick. I do believe there's also traders using this method, but it's very, very profitable. I do believe it's profitable. It has been working for me. Maybe it won't work for you, but maybe it will, right? So let me show you guys even the secret. It's not really a secret, but you guys can say it that way. So 0.5%, like I said, the only reason why I'm risking 0.5%, the only way that I'm going to be risking 0.5% is always the beginning of a new month. For example, today we started a new month, which is March, right? Tomorrow is the new month. Well, we're already in the new month, but let's say technically Monday we start trading, right? We're in the new month, right? Every beginning of a new month, you want to risk 0.5%, right? So let's say you guys have an account balance of 10,000 at the beginning of a new month, right? You're going to be risking 0.5%, right, of the account balance until you achieve 10%, until you achieve 5%, right? So your goal is to make $500 off 10,500, right? So once you make $500, right, once 500 is made, you can now increase risk up to 1%, right? Simple. So once you guys make 0.5% of $10,000, which is 10,500, then that's when you guys can increase it up to 1%, right? Let me show you guys how simple it is this, right? I'm gonna show you guys why I do believe it's very profitable. So very simple. Let's do it right here. $10,000. Risking 0.5% of this account is gonna be negative $50, right? So you're willing to risk $50, right, to make $100, which is 2%. Or 3%, right? You guys don't really want to focus on making 1%. Usually whenever you guys make 1% in general, or in this case 0.5%, you guys just want to, the way that I manage my risk, obviously you guys can do it the way that works for you, but the way that I do it is that once I'm already making 1% of my account balance, that's where I'm gonna have my stop loss at break even, right? I'm not gonna pretty much just close my trade because it hasn't even hit the target that I want price to come into, right? Like, why would I close a trade very early if it hasn't even come to the zone where I want to exit out my trade, right? It's just nonsense. A lot of people do that because they get attached to the money and not to the plan, right? And that's why I do believe there's gonna be traders, like new traders, that come into the market and just want to make money quickly, right? When in reality, if your mindset comes into the trading literally that you want to make quick money, you're not going to last in this game, right? So obviously you guys want to stick to the plan and not into the money, right? So don't let the money fool you guys. So you're risking 0.5, right? So that's why I tell you guys, when I'm up 1%, just move your stop loss to break even. Once you guys make 2%, that's where you guys want to move your stop. That's where you guys want to secure some profits and just let the trade run, right? I usually focus always on a 1 to 3 risk to reward. That's always my plan, right? Always a 3 to 1 risk to reward trade. So willing to risk 1% to make 3%, right? So at 2%, that's where I'm cutting half of my profits, just letting it run. At 3% is when I close out my position completely. 1% is when I move my stop loss to break even. So in this case, right, you're willing to risk $50 and your profit goal is to make $100, which is going to be 2% of this, and then 3% is going to be $150, right? Check this out. Let's say you guys win the first two trade, right? You win the first two trade in your account balance as at 10,200. You lose the next one, right? Which is cool. Your account is at 10,150, right? You lose the next one, cool. Your account is now still at 100, but you still profit, right? You check this out. You're still profit. You're still in profit. So you won the first two trade and then you lost the next two trade, but you guys are still in profit. Now, let's say you guys win the next 3 trades, right? And you guys secure on 2%, right? It doesn't go into your 3%, it just goes into your 2%. Goes into your 2%, you guys made 3 trades, right? So from 100, 3, 4, right? Yeah. So you won the first one, 100, 200, 3, second one, and the fourth one, 400. boom, you guys win 3 trades in a row. Your account balance is now at 10,400. You need $100 more to make 5%, right? Let's say you guys lost the next one, right? Boom, cool. You guys lost the next one. You're still profiting. You had 10,400, now at 10,350. You win the next one, which is $100, right? Or you make, let's say you guys win the next one, which is 3%, right? Check this out. You're from 350, and then you go all the way up to $500. Literally that simple, right? So all you guys need to do is literally win 5 trades in a row, maybe even 4 trades, right? Depends if you guys are able to make the 3%. If not, you stick with the 2%, which is pretty cool as well. You still make more than what you're willing to risk, which is obviously what you want. All right, so once you guys 10,500, that's when you guys can increase it to 1%, right? So now obviously when you're up to 1%, you guys can risk bigger. And in this case, you're risking now $100 to obviously make 2% of 10,500, right? In this case, it's gonna be $200 to 10, right? So that's very, very cool. So if you lose one, you're gonna be down 10,400, but if you win one, you're gonna be up $10,610, right? Which is obviously a profitable, right? You guys always want to maintain profit. Your goal is to obviously have the profit bigger than your losses, right? So that's very, very simple. How do I manage my trade? Like I explained to you guys, right? I'm not cutting my trades early if I'm in winning, right? If I'm in blue, I'm not going to cut my trades early, right? The only way that I'm going to cut my losses, right? Or my trade is whenever I'm in drawdown, right? Whenever I'm in drawdown. So if I'm in drawdown 1%, not 1%, if I'm in drawdown 0.5%, that's when I'm cut half of my losses, maybe even close out the trade if price just keeps pushing under and it's just pretty much going against my trade. That's where I'm going to cut all of my losses. But if I do have potential and I do see that price still can play out correctly, but we're still in drawdown, obviously your goal is to cut down losses, right? Because like I said, your losses always have to be smaller than your wins. If I do cut my losses, let's say I enter from here and then price just start coming here, but then price starts shooting back into the upside. Obviously, the next thing to do is not just to enter here just because you get a better entry point. Just wait for price to give you the better confirmation to then enter the second entry, right? Which is pretty cool as well. So that's pretty much how I manage my risk. All right, so now I'm gonna explain to you guys exactly how my strategy works. What exactly do I look for, and pretty much how the whole thing works. And then we're gonna go into technical. We're gonna go into exactly show you guys how I analyze the market, how do I look for my setups, how do I take my trades. But this is gonna be very simple. So my strategy is support and resistance, right? You guys obviously know you buy off support, you guys sell off resistance, right? But it's not as you guys think it is. It's not as simple as you guys think it is. The strategy is simple, but it's not just, buying off support and buying off resistance. There has to be a way to buy off support and there's have to be a way to sell off resistance, right? So that's one. We have the other one, which is trade with the trend, right? Obviously, you guys gotta, everyone has to do this, right? Trade with the trend. If price is heading to the upside, you guys want to focus on buying the market, right? Since price is heading to the upside. If the market is heading to a downside, you guys are looking for sells, right? So it's very simple. How do I look for that when I'm trading support and resistance? Simple, right? Price creates highs, higher lows, and higher highs. Whenever we're in an uptrend, you guys obviously know we are creating higher highs and higher lows, right? So the idea is to trade with the trend. So let me give you guys an example. Right over here, we have a resistance, we have a support. Previous highs, present higher low. Whenever we form the higher high, the only way to price to continue pushing to the upside, there has to be a higher low. So we get a higher low. Boom. Resistance turns into support. Once price comes into this area, it doesn't mean that you guys are going to buy off right away, because there's going to be times that the market can just create a higher low and then start breaking to the upside, and from there on start having a different structure, right? In this case, this is when price is called shift to structure, which is also part of my strategy, which I'm going to get into details in a few. But this is why I don't recommend to buy off support. Like I said, it's not as simple as you guys think it is. Just buy off support, buy off resistance. But that is mostly the time that price can actually do that, right? So that's exactly what you guys don't want to be focusing on. Whenever price comes into this area of interest, right, where price comes into the area that you guys want to buy, you guys obviously have to wait for specific things, right? You got 3 things to wait for. Rejection from area of interest. If we are rejecting off the resistance, we are seeing rejection from the EMA. That is one confluence. Second one, you need a bullish pattern or a bullish confirmation, right? Bullish pattern, a bullish candle confirmation that's telling you that price is now ready to take off, right? So what is the bullish pattern, right? If you guys are looking for bullish pattern, you guys have the double bottom and you guys have the inverted head and shoulder, right? Those are the bullish pattern that I mostly focus on. And then obviously the bullish candle, which is bullish engulfing candle, which I'm mostly focused on as well. Once you guys get that rejection, etc., then you guys are good to go, which I'm going to get into details as well. But that's exactly what I mean by buying off, going along with the trend, right? If price keeps heading to the upside, we're breaking above this new higher high, price creates the next higher low, boom, buy, right? Just simply keep doing the same exact thing. Same thing, same story whenever we are selling. Whenever we are selling, we are breaking under support. We can also say higher low if obviously we're from the trend, right? If price starts breaking under, we start creating these lows. We form a lower low, and then come here, we form a lower high. I'm always going to be looking to sell off the lower high. I'm not going to be selling right over here because I think the price is going to be taken down, right? I won't be selling here just because I'm thinking the price is going to sell off. I need to wait for that confirmation of price coming into my area of interest, which in this case for selling, I'm looking for price to come into support, and that's exactly where I'm going to sell. Same story. I'm not just gonna sell because price came into support. There has to be movement. There has to be confirmation that's telling me that price has the potential to keep pushing even lower, right? So that's what I mean by just going along with the trend. Obviously, you guys don't want to be trading in the range, right? You guys only want to be focusing on the uptrend and the downtrend. Whenever price is ranging, whenever price is pretty much just going up and down, not really pretty much not doing anything, this is where you guys don't want to freaking trade, right? You guys don't want to trade in this shit at all. And then the shift to structure, right? Obviously, just by hearing it, you already guys know exactly what shift to structure means. Shift to structure is pretty simple. You have the highs, the uptrend, and then you have the downtrend, right? Let me show you guys an example. Who is texting me? Give me 1 second. All right, so shift of structure. What does that mean? Is whenever price literally just shift from one thing to another. For example, the market moves in two different ways, the uptrend and the downtrend. We're heading to the upside, and then price starts shifting to a downside, right? Let me give you guys an example inside the market. Here, what do we have? Let's just focus on this case right over here. What do we have here? We have an uptrend, right? What do we have here? We have a downtrend. This is where price starts shifting in structure, right? We've went from creating higher highs and higher lows to now creating lower lows and lower highs, right? What do we have here? We have a range. We don't focus on that as well. Over here, what do we have? An uptrend. What do we have here? We have a downtrend, literally a shift in the structure. Pretty much the market's gonna do this every single time, right? The market's always gonna shift the structure. You know, we're going from higher highs to going to lower lows, right? The market is always gonna do this. Now, let me go into a little bit more details on how shift to structure works, because this is what I do recommend, right? You need to understand market structure. If you don't understand market structure, it's going to be very, very hard to understand how to trade, right? With my strategy, it's part of this, I don't know, different strategy, really focus on market structure, but that's what mainly I focus on. Market structure is literally like key. Like, you guys need to understand this. So let me show you guys shift to structure. Let's talk about first the higher highs and higher lows. Let's do this for this case. I'm gonna draw the lower lows here. Boom. All right, so whenever price is shifting the structure from going from the downtrend to now heading to the uptrend, how you guys know that it's gonna be a 100% shift of structure, right? Whenever price is gonna shift from going bearish to bullish, is whenever we break past the previous highs. For example, check this out. Right over here, we have an area of, obviously, we do have the lower lows. Let me just quick, lower lows, lower high, right here, and we got our lower low here. So, all right, so this is how you know. So we start breaking under, right? We form a lower low here. Wow, let me just do this. Forgot to put this one. All right, so we have a lower low. Like I said, the only way you guys are looking for sell is for price to pull back, retest the previous lower low to use it as a lower high to continue selling, right? So you guys always want to sell off the lower high. Whenever price creates the next lower low, and then we come back into this high right over here, this over here, it doesn't mean that price is having to shift the structure, right? We're still in that low. We're still in the high, right? This still going to remain itself as a high. The reason why is because this high is not higher or lower than the previous high. So it remains still as a high. Now, how you guys are like one clue, right, or one idea that is telling you that price is now getting ready to shift the structure is gonna be this leg over here. What is this leg gonna be now? This leg is gonna be a higher low. The reason why is because this low right over here is higher than the previous one, right? You guys can see it. This one is lower than the previous one, so it's the lower low. This low is higher than the other one, so it's a higher low. Boom. Once we break above these previous highs, previous lower high, this is when we form a new higher high. So that right there is going to be called a shift of structure. We're now shifting from bearish to now going to bullish, right? You see how simple is that, right? What happened next? Like I said, whenever price starts pushing to the upside, you guys don't want to buy it right away, right? It's like pretty much buying what is that people say, like, you know, buying the hype, right? You guys don't want to buy the hype. You guys don't want to buy when there's volatility, the market just keep pushing to the upside, right? Because there's gonna be chances the market pushes and then you guys buy it right here, and then from there price just again shift the structure and then takes you got a stop loss, right? You guys don't want to buy it like that. You guys always want to wait for the next higher low. Boom, we formed the next higher low. Price comes into potentially retest the previous lower high to potentially use it as a higher low. Cool. Price comes into this area of interest. Price comes here. We do see this rejection, etc., etc. We do see this boom, 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 whatever. This is where you guys want to buy the market. Boom, higher low, and boom, you guys enter the trade, and there you go. That's how it simply shift the structure works, right? We're literally shifting from bearish to bullish. Simple, just like that. So those are the three things that I really focus on whenever I'm trading. Obviously, I also focus on price action, just the candlesticks, pretty much the formation and all that stuff, which I'm going to get into later, more details into that. So now let's go into technical. I'm going to show you guys exactly how I mark up and how do I look for my trades. All right, so now that we're done with all those, those basic, boring questions, we're gonna go into the fun part, which is why you guys are here. Show you guys exactly how I mark up and how do I look for my setups, right? So I haven't marked up GJ yet. I just marked up US30 and gold earlier today. As you guys can see, this is my notes, what I do every single day whenever I'm marking up. I haven't really done GJ yet. So we're gonna do this literally raw, like from scratch. So you guys are gonna see me. It's probably be a pretty long clip. I'll delete some clip if I need to. But you guys literally gonna see raw. You guys gonna see if I messed up. You guys gonna see if I'm confused, all that stuff, right? Which is gonna be pretty interesting, right? So we're gonna do this raw. So we're gonna focus on GJ. So let me explain to you guys the time frames first, right? So every beginning of a new month, obviously you guys want to do your top-down analysis. Everyone should be doing the top-down analysis every week, right? You do analysis to see how price is moving from the monthly, weekly, blah, 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 right? But every beginning of a new month, right, I like to start all over again. So I delete the chart and just literally start fresh. So in this case, we're going to focus obviously what price is doing here, right? Pretty much on what price has been doing the next couple of days. The past month, what price has been doing here. Not really going to focus on what price has done here. There's going to be a zone that price can obviously touch into a zone that can be potential targets, etc., right? But I'm not really going to focus on the patterns that price has done in the past. Trading is always going to repeat itself, and you guys obviously want to do this whenever you guys are doing your own study. Just pretty much study the pattern. Why did it fall here? Why did it do that? But since we're just going to mark up, we're going to focus on what we're pretty much looking for. So what I look for the monthly things is obviously two things. Look for the monthly trend and then look for the previous monthly highs and the previous monthly lows, right? This is what I do every beginning of the new month. So just by looking at the monthly trend, you guys obviously know that we're in a bullish trend. We are simply creating these highs, higher lows, higher highs, right? Higher lows off the lower time frame as well. So the monthly time frame, obviously we do know that it's bullish. Second thing that I look for is the monthly highs and the monthly lows off the previous wicks, right? So check this out. And the reason why I do this, which can be potentially used as profit targets, right? So this is why I do it. I really don't do it just to click it. This can be potential profit if price goes bullish. This can be a target here. This can be another target as well, right? The wicks is from the monthly, but the lower time frame, they're going to be candles, right? So template, there's going to be monthly highs. This right here is going to be monthly lows. And you guys want it to touch the wicks at the bottom. Monthly lows. Boom, perfect. Now we're gonna write down our notes, right? Monthly, we are bullish. Cool. So we know that one thing. We're gonna go into the weekly time frame, same exact story. What are we gonna look for? We're gonna look for the previous weekly highs and lows, and we're also gonna look at the previous. We're gonna be looking at the weekly structure, right? So what is the weekly structure at this point? You guys can obviously see that the market is bullish. At this point over here, we did see that price form a support. That you guys can already see that price failed to break above it. This is where the bullish volume continue off the weekly time frame, right? So we started a very strong bullish pattern that we broke above the previous highs, which you guys can see is this one. We broke above this previous high. I believe this month was last month, well, 2 months ago, which is January, literally the beginning of the year, is whenever price managed to break above it, right? So my bad. The beginning of February is when price started to manage to break above it, right? So we broke above previous highs, right, which is higher highs, and now we form a new higher high. Like I said, for price to continue going bullish, we need those proper pullbacks to continue the bullish movement, right? Now we do form a new higher highs here, right? So we're just gonna write this down. There's nothing you guys need to do, but just keep your note with the video. Higher highs. So we have a higher high here, previous highs right here. Just leave it like this. Weekly time frame, obviously we are bullish as well. Weekly lows, you guys just want to mark this very quick, can be potential targets as well. Maybe we're gonna delete it because it doesn't really look clean at all. Right, weekly lows, this also can remain as a weekly high. So we're gonna go into daily structure. All right, so cool, this is what we want to focus on. What is going on the daily time frame right now? We're gonna pretty much look at the daily structure. Delete this. So like I said, right, I'm gonna be correcting myself if I do something dumb or stuff like that. But it's just gonna do this raw, show you guys exactly how I do it. Monthly bullish, weekly bullish as well. So we're gonna write that down as well. All right. So did I explain to you guys weekly, right? Yeah. Now, let me explain this real quick. So the reason, like I said, the reason why we're bullish off the weekly is because obviously you guys know that the price is creating higher highs and higher lows, right? We are literally highs, break above this previous highs. We need a higher low to continue bullish. Same thing over here. Price has been very bullish overall, right? Now, where you can say the price is now getting ready to have the shift to structure off the weekly time frame is once price starts breaking under this previous highs over here, right? Excuse me. Once we start breaking under these highs over here, because once price comes here, it's supposed to be, it doesn't really supposed to, but ideally is price comes into resistance and then it turns into support, right? That's how you know that the trend can be still valid, the bullish trend is valid. Now whenever we come into the zone, this is where you guys got to be careful, because there's going to be times that price can start breaking under the zone and remain under it. The lower time frame, price can just come back into these couple of zones over here and then start shifting the structure, right? So that's pretty much what is shift to structure. So that's the only way that you guys can say that the market off the weekly time frame is not bullish anymore. We're not going bearish once we start taking under these highs over here. Just to let you guys know about that one. So how exactly did I have it? Did I have something in there? Yeah, so that was the weekly lows, right? So weekly lows to potential targets as well. The daily time frame, cool. So what do we have off the daily time frame? The daily time frame, is it bullish or is it bearish? Just by looking at this, what do you guys think? So the daily time frame, you guys can see that from here, right? You guys can literally see the momentum, highs, low, higher highs, higher low, higher highs, higher lows, higher high potential. This still remains as a low. The reason why it's a low is because this low is not higher or lower than the previous one, right? So we're going to the 4-hour time frame. You guys can see the price is literally just at this area of support, which is the weekly lows, right? So we're literally still at this zone over here, which is the support zone. Price still hasn't really taken under those supports, so it remains as a low. Now on the 4-hour time frame, you guys can now see the shift of structure, right? What do I mean by that? Literally, you guys can see how the market was simply creating higher highs and higher lows, and then we come into here, form a high, we form a low. What happens next? We form a lower high. Literally on the 4-hour time frame, you guys can literally see the shift of structure, right? So we're gonna write that down as well. The 4-hour time frame, we're having the shift of structure, right? So we're gonna write that as a note. Perfect. So how exactly do I know we're having the shift of structure off the 4-hour time frame? Check this out. What happens over here? Whenever we headed to the upside, we created that new higher highs and higher lows. We formed this new higher high. We came back all the way down, creating the low off the higher time frame, right? But if you go off the 1-hour time frame, obviously before we got to this low, we started having a low shift of structure. Off the 4-hour time frame, right, we got the pullback into this break of structure right over here, right? So you guys gotta mark this up as a break of structure. Boom, perfect. This right here is going to be a break of structure like I explained to you guys earlier, right? Whenever I'm looking for sells, we got to wait for break of structure, pull back, use it as resistance, and then continue to sell. What exactly the price did over here? We broke under the previous higher lows, right? Off the lower time frame, broke under the previous lows. Price form a lower low, right? We form a lower low over here, not lower, we form a low, and then price comes over here and then forms the lower high. Cool, right? We have the lower high legs, so we're having the shift of structure off the 4-hour time frame. So that's one thing to keep in mind. Now, very simple. We go into the 1-hour time frame. I already found my setup just by doing this, right? I go into the 1-hour time frame. The 1-hour time frame, we are bearish as well, since price is just pretty much trading under this area of support of the 4-hour time frame. The daily, I wouldn't really recommend it bearish completely yet until we start breaking under this weekly lows. Once we start breaking it, I'll tell you guys that price has more possibility of going bearish, and once we start breaking under all of these lows over here. But the 4-hour definitely bearish, right? Cool. So now that price came into my area of interest, right? So this right here is my area of interest. We are already seeing rejection towards these zones over here, which is cool, which is ideal, what you guys want to do. Check this out. We have the H4 pullback, we have the H4 rejection of structure and off the EMA, which is literally all I need. Looking at the H4 candles, we are heading, literally the candles are closing red, which is bearish, my bad, right? So cool. What I do next is that once I already see this confirmation, I'm going to go into the 1-hour time frame and then wait for a break of structure, which is literally right here. This is literally a free, not free, because I'm literally going to post this in the next couple of days so you guys can really catch this, but hopefully it does play out and then I can show you guys exactly what happens. But this is literally easy setup, right? Let me just write down my notes so you guys can see exactly what I looked for. So we have the H4 prices having shifts of structure. Let's write down here. One 89,083. So these are just notes that you guys want to write down, right? Just pretty much telling yourself, remind yourself what it pretty much you guys are looking at. This can also be used as a confluence, right? So like I said, the monthly, weekly, we're bullish. The H4, we're having the shift to structure, right? So we're not pretty much bullish off the H4. We are now creating lower lows and lower high off the H4 time frame, right? So that's also, you guys want to write that down. Having a switch of structure to bearish. Boom, right? Like I said, we were creating higher highs and higher lows here. We form a high, right? We form a higher high, we form a low. This low remains low because lower, lower, blah, blah, blah. You guys already know. Pull back and then forms the next lower high, right? Simple. That's all I need to know just by looking at the H4 time frame. Now, we did get the pullback. We did see rejection from EMA. We are literally seeing this. Literally looks clean. Now, I'm going to go down into the 1 hour time frame and then I'm going to look exactly how I'm going to take my setup. So this is very simple. We have seen rejection from here. We're seeing that this area of support is now holding as resistance, right? Like I said, you don't want to be setting off resistance right away. You got to wait for confirmation, right? Because I could have entered here and it could have played out like you guys can see that it did drop into a downside, right? Now there can be times that I enter the trade and then price just have the shift of structure to the upside, and then from there we break above support, pulls back, use it as support, and then that's where price forms the new structure, right? We start creating higher highs and higher lows. So this right here is pretty cool, right? We are seeing rejection. This happened on Friday, right? It was also a Friday, so you guys don't want to rush. Another thing that I want to say as well is that you guys don't want to rush a trade, right? Let the trade come to you. You don't want to force a trade. So if a trade comes into your area of interest, you guys got to wait and write down your rules. What happens whenever price comes into the area of interest? Are you going to enter right away? or you're gonna wait for specific rejection, specific movement that price is telling you, price is ready to enter the trade, right? So that's exactly what you're gonna do. Remember, the market is not going anywhere. The market is gonna be there every single day. You just gotta wait for the right setup to come to you. So we already saw the rejection towards my area of interest. We are seeing this. Cool. How exactly am I going to enter now? I'm going to wait for that minor break of structure off the lower time frame, right? So very simple. I'm going to wait for this. Boom and boom. That's simple. Once we get this, once we do see that price breaks under this lows over here, right? What happens next? We need price to come back, use this area as resistance, and literally give us the same exact thing that did over here to now give it to us over here. Simple. If we get a candle closure, right? Let's say we do get a candle closure over here. We start seeing the price pulls back, right? We start seeing that we have rejection from here, here, here. We get the bearish confirmation, bearish pattern. We literally get the retest of the EMA. We get rejection from EMA, rejection from the structure, boom, and price gives me an entry signal, boom. That's exactly how I'm gonna enter my setup, just like that. And I'm gonna target, like I said, I'm gonna target my next target, which is the weekly lows. That is why I'm always mark up the weekly lows and the weekly highs, which they can be used as potentials target, right? Because if price starts breaking above to this side, what is my next target, which is going to be my weekly highs, which is going to be right over here. So as you guys can see, that's exactly how I mark up and I look for my setup. Very, very simple. It's nothing complicated at all. I just look for shift of structure. I look for confirmation that price has more power of going highs or lows or highs, right? And then I'm just looking exactly how I'm going to take my setup, and I'm just going to wait for price to come into my area of interest, right? I'm not going to be taking the setup here because that's not the area that I'm interested in selling, right? I'm interested in selling under. So that's exactly what I'm waiting for. The next thing you guys want to write down here is just write down the notes, exactly what you're waiting for. So in order to sell, in order to sell, price need to break under minus support of H1, H4. This is what number 189, 790. Boom. Breaks above previous lower high. Right there. Cool. So these are my notes, right? And like I was explaining to you guys, so shift to structure, right? I did give you guys the example. You guys can go back and rewatch that example. But I did mention, right? Literally, this is happening right over here. Check this out. Price from here creating the lower lows and lower highs. We're still bearish because we're still trading under this area of support of the lower time frame, right? So let me just write this here. Higher highs. So you guys can get a better picture, so you guys can understand. Hopefully the way that I'm showing you guys can give you guys a better understanding of my strategy, that you guys can possibly understand it. If you guys don't understand, you guys understand, make sure you guys comment so I can find better ways to explain to you guys. Trying to do this very raw so you guys can obviously understand. I'm just showing you guys the mistake I made. You guys saw that I made some mistake. You guys saw I deleted some. You guys saw that it took forever. But just be very, very clear. Just show me guys. Tell me guys if I'm, if I'm missing something, if I'm doing something wrong, so you guys can obviously, for the next time, I make it better for you guys, so you guys can obviously get knowledge from it. So, like I was explaining the shift to structure earlier, right? The only way, since we're still bearish off the H4 time from H1, we're bearish, creating lower lows, lower high, price gives into area of interest, all the stuff that I said, right? The only way that I'll be interested in buying is whenever we have to shift to structure, right? So like I said in the previous example, the shift to structure is when price starts breaking above the previous next lower high. So we have the higher low, right? No, this is a low, my bad. So we have the low, the lower high. The next thing that I'm waiting for is for the next higher high. So once we get the higher high, and then we do see that price pulls back into this zone over here, what happens next? We literally get the retest of the lower high. We get the retest of the support as well. Support over here is currently using as resistance. We break above it, we form the higher high. Cool, right? We form the higher high. Once we form the higher high, what happens next? Then we start forming the potential higher low to come and retest this area of interest, right? So once price comes into the zones over here, right, what's gonna happen next? We break above it, the EMA is now gonna start trading pretty much something like this. We need to have the EMA remaining itself under if we're looking for buys. If we're looking for sell, price EMA has to remain as is remaining at the moment, right? Just above it, right? So once we get above it, right, we have the higher high, break above the previous lower high. That right there is already telling us that price is getting ready to have to shift the structure. Cool. Wait for the next higher low. Once we get the higher low, we retest this zone. We do see that this area of support continues holding. That's exactly where I'm looking to take the buys. Price gives you guys the entry confirmation, etc., etc. You guys are going to target your lows, whatever, how you guys put your stop loss. I mostly focus on putting my stop loss at 30 pips, and then obviously look for 3%, which is always going to be a 1 to 3 risk to reward. And then obviously you guys want to do the target of the weekly lows, weekly highs, daily highs, lows. You guys always mark, but I'm always looking for a 3 to 1 risk to reward trade, right? Perfect. Once you guys get the entry, boom, that's exactly the only way that I'll be looking for buys, right? So you guys need to have two plans. If price doesn't go the way that you guys want it, then you have a next plan. How you guys can execute the next plan, which is simply called react and adapt, right? We don't get those rejection here. We start seeing the bounce. Okay, price breaks above here. What can happen next? Boom, we already have this next setup planned. And that's exactly why you guys need to write down these notes so you guys pretty much understand the next move, right? So right there, like I explained to you guys, that right there is literally called the shift of structure. Break above lower highs, creates a higher highs, use it a higher low, simple on shift of structure. You guys look for the next play. So that's pretty much exactly how I mark up. You guys already understand why I'm looking for sells. You guys understand why I'm writing this down over here. So that's pretty much it with the technical. Now let's move into the next step. So moving forward, we have the entry and we have the exit strategy that I use, right? So like I did explain earlier with support and resistance, right? Support and resistance is not exactly what you guys think. Is that comes into support, buy right away, comes into resistance, sell right away. There needs magic inside of that support or resistance to give you guys the confirmation to sell or buy, right? Now, this right here are the candle patterns that I use. Always use these candle patterns, right? And these are the market patterns that the market forms, which I always use. Obviously, we have the bullish patterns here, the bullish candles here, and then the bearish pattern and candles under over here. So let me give you guys an example exactly how I do this. Let me just put this all the way down here. All right, cool. Let me give you guys the two examples with bearish and bullish. So we have our support, and then we have resistance, and then our support right over here. Cool. So let's say that we're looking to take buys with the market, right? So we start creating these highs. Boom, break of structure here, form, and then creates back into the upside, right? All right. So let me just delete this part first. I did this wrong. Boom. Okay. All right, so when we're looking for buys, we need the shift of structure, we need the retest, we need those entry confirmation, right? So this right here is just, if we're coming from a low trend, right, creating lower lows and lower highs, right, and we created this lows over here, this right here is the shift of structure, right? We break above previous highs, we create a new higher high, potentially can form as a higher low to continue breaking to the upside. We have the EMA literally just coming like this, right? Or let me just do something realistic like this. Perfect. We have the EMA coming here. Like I said, you need to wait for shift. Let's just put as you need rejection, area of interest, and EMA. And then last one is so those are the three things that I'm looking at, right? Confluence that I'm looking at to enter a trade. So here we already have the shift of structure, right? We're now retesting, and oh, I wrote that wrong. All right, so now we need the retest, which is going to happen right over here, and we need rejection, right? So that's the second thing we look for, and then the third thing is obviously our entry signal, which is the candle pattern, the candle or the candle or the market pattern confirmation, right? So let's say that we're looking for buys, right? This is what we're gonna be looking for, right? We're not gonna buy right off support because there's gonna be times that the market literally just comes like this, breaks through it, and then start having the different structure, and then can obviously shift the structure, and then from there on keep pushing back into the downside. There's gonna be times that the market comes here and then boom, takes off right away without giving you guys those confirmation. And whenever price does that, right, you guys, like I said, you guys don't want to enter the market right away. You guys don't want to be just entering just because you guys see the market is going into the upside, right? There's gonna be a lot of times that you guys are gonna miss your entry. There's gonna be times that the market doesn't even give you guys your entry, so obviously you guys gotta wait for the next thing. If this things happen, right, you miss your entry or price doesn't really come into your area of interest where you guys want to buy the market, right? Because you guys also got to mark up the levels, right? You guys, if you guys are interested in buying at 183.06, you guys obviously want to have the alarm. You got to wait for price to come into that zone, right? But if we end up, let's say that we do miss that trade, which is 100% fine, which is totally fine, you guys can see this mostly of the time with trading. What is the next thing to do? Like I said, follow the trend, right? That is one step of my strategy, trade with the trend. So if we're creating higher highs and higher lows, we break above this highs over here, cool. Most likely price is going to give us, most likely, regardless, right? Price is going to come back here, retest the previous high, the higher low, use it at, retest the previous higher highs, use it as a higher low, and then boom, if you miss entry here, this right here can be your second entry, right? So don't always chase the trade. So like I was saying, price comes into here. We're going to be waiting to see what price does here. If we do see that price gave us a rejection, and then comes back above it, price has to remain itself above. So right there is already a rejection from EMA, rejection from structure. We go down into the lower time frame and we want to see exactly how price is trading over here, right? Let's say in my strategy, in my style, in my case, like I said, I'm a day trader, swing trader. This can definitely, it can probably take a couple of days, it can take a couple hours for price to actually come into my area of interest before taking a buy or sell, right? For scalper, if you guys trade off the lower time frame, it probably happens faster. You guys get the quicker move, but I obviously focus on the higher time frame. So it takes hours for price to come into my area of interest, right? So once we get that, we need to have those hourly 30 minutes, 15 minutes rejection from those area of interest, right? We need to wait for price to remain itself above or under, depending. In this case, we're buying the market, right? So we need to remain itself above. Once we remain itself above the structures over here, we're going to be waiting for our bullish pattern or a bullish candle pattern, right? So in this case, this right here is going to call the hammer pattern, right? The hammer candle. This is actually one of my favorite ones, which is a very simple confirmation, right? So this is very cool. A hammer is whenever we pretty much wick reject the area of interest and then price remain itself above as a bullish candle. It literally closes like this with a wick rejection, and then we just close the candle, the body literally like this. This right here can be used as an entry signal. So if we do see that price breaks on the structure, retests the rejection, maintains itself above, we come back at the area of interest, and we do see that price gave us a hammer curl. This is exactly where I'm gonna enter my market, where I'm gonna enter my trade. This is one of my confirmation, which is a hammer curl, my bad, I'm thinking about the gym, which is a hammer candle. Your stop loss, like I said, you always use a 30 pip stop loss. If you guys use tighter stop loss, you guys always put your stop loss on the previous lows, and you guys can do that. Me personally, I always do 30 pips. Perfect, right? Where am I gonna target? My next target, like I said, always I'm gonna target a 1 to 3 risk to reward, right? But you guys always want to also target the previous highs, because not always price is gonna give you 3%, not always price is gonna give you 2%, right? So once price comes into the previous highs, I do recommend you guys to, if it's a 101, cool. You guys can move your stop loss to break even. In this case, it is a 101. So you guys want to move your stop loss to break even, and then from there on, obviously just let your trade run. But that's where you guys want to basically target. I always do a 3 to 1 risk to reward trade. You guys can obviously look at the bigger picture. If we did have previous something like this, right, you guys can also target this previous lower highs, which can also be a full longer term target, right? This case is a 3 to 1 risk to reward, right? So this right here can be a confirmation. Another confirmation, which is the famous candle, which is a bullish engulfing candle, right? Everybody knows exactly what is this candle. We have a bearish candle, which is nothing very strong, like a mini bearish candle closure, and then we have the bullish candle opening bullish, right? This right here can also be used as another candle that I use for confirmation to enter a trade. So Fuck. Where can I grab this? Right here. Let me just delete this hammer. It's funny, I said hammer curl. All right, so this right here can also be a confirmation. This is also one of my favorite ones, right? Very simple. I think all of them are my favorite. This is literally the only ones that I trade. So all of them are literally the favorite ones that I trade. Like I said, we get those rejection, price remain itself above. You guys have to make sure that price is above it, right? If price is trading under like this, it's not valid. Reason why is because it doesn't make sense taking a buy under this area, under the previous lows, right? Under the previous high, right? You guys want to sell above the previous high. You guys want to buy above the previous highs, right? In this case, we're buying under resistance, which it doesn't make sense. You want to buy above resistance, right? That's what I meant. So if it's above, it's not valid. You guys got to make sure that price is above it, right? We're above it. Price does this, blah, blah, blah. Gives you guys those rejection. We get those bullish engulfing candle patterns that I showed you guys. In this case, the bullish engulfing, boom, perfect. That's exactly where you guys want to enter the trade. And then obviously you guys want to target back into these highs over here, right? Or have the 3-to-1 risk to reward, however you guys target, right? Me personally, I always do a 3-to-1 risk to reward. You guys can also target these previous highs, which you can use as target as well. If it comes there, you guys can secure half. 1 to 1%, exactly how you guys want to manage your risk. Me personally, like I explained to you guys earlier, right? So those are the bullish candles, right? Now we're going to talk about the bullish patterns, right? Because price is always going to give us bullish pattern as well, right? Obviously you guys already know this one, which is a double bottom, and then we have the inverted head and shoulder. Inverted head and shoulder and head and shoulder are actually my favorite ones instead of this double bottom and double top. These are literally my top 2 patterns of every time I see this pattern. Very simple to trade, literally very, very simple. So we're also going to see some patterns that the market gave us pattern like this. We come into the area of interest. We have the left shoulder, we have the head, the right shoulder, and then we have the push into the upside, right? Pretty much this right here in the middle is the neckline. So if price does give us this entry, right? If we do see the price give us something like this at area of interest, our area of interest to look for buys, right? What is the next thing to look for? Oh, shit. So if this right here is the left shoulder, we have the neckline, the right shoulder, and we have the obviously the next shoulder, right? When price give us this trade over here, how exactly are you guys going to enter this trade? You guys don't want to enter right over here. You guys want to wait for those confirmation, right? Again, trading is literally just being patient and just waiting for the setup, like I explained to you guys. So you guys don't want to be rushing the trade, because if you guys enter from here, price can literally just do this. Remember, right? So you guys got to be very patient. So if we get the head and shoulder, we're going to be waiting for the pullback to retest the neckline. Simple as that. We got the rejection from EMA. We did see the bouncing to the upside. Now just wait for the next pullback, retest the neckline, and then from there on, you guys just wait for those bullish candles, right? The candles that I just showed you guys, blah, blah, blah. Boom, you guys can enter right there. Perfect. That's exactly how you guys can enter with the head and shoulder. Now we got the inverted head and shoulder one, which is my favorite one. How exactly are you guys going to trade this one? We break into the downside, right? We create the left shoulder, boom, creates the head, and then creates the right shoulder. From there, we did see the rejection from EMA, rejection from structure. Price is remaining itself above as support. We have the push into the upside, but we formed this pattern. We're going to come back and literally just retest the neckline. Simple as that. Wait for the pullback, retest neckline, creates a higher low. Perfect. That's where exactly you guys are going to enter the trade. So that is my bullish confirmation with patterns and candles, how I'm looking for trades whenever I'm taking a buy position, right? Now let's talk when I'm taking a sell position. So let me delete all of this. Boom. So you guys, it's very, very simple. That's exactly what I do every single day. A lot of people, a lot of traders have different ways of entering the market. They have, I do believe, trader that enter off order blocks and stuff like that. Me personally, I haven't really got deep into that stuff. I have tried it before, it has not worked for me. I tried it for like a good 2 months, have not seen the best results with it. So you know, obviously this is a strategy that has worked for me. Like I told you guys, everyone has different strategies. You guys got to find out a strategy that actually works for you. Maybe you guys trade with order blocks and it helps you guys way more, and you guys pretty much see this differently, right? The way that I see it, which is cool, I understand, right? It's your strategy, it works good for you. You guys, like I said, you guys don't have to copy my strategy. I'm just showing you guys the strategies that I'm using, since I do get a message, a lot of people asking, hey, what strategy are you using, right? Just want to pretty much give you guys the full details. So that's pretty much the way that I enter the market. Like I said, everyone has different ways of entering. You guys can enter from order blocks. I don't know what is the other, like gaps, or the liquidity sleeps, or some stuff like that. Really don't understand all that stuff, but it's pretty cool to understand it as well, which will give you guys a better picture with the market. But whatever works for you guys can chill in. So now we're looking for the sell one. Literally the same exact thing that I showed you guys. We're looking for the sell. What do we have here? We have the evening star, right? Which is, you guys gonna find it on top of the market. You guys are always gonna find it on top of the market, right? Evening star is when the market, is this an evening or morning star? Wait, let me give you, yeah, it's the evening stars. I was right. The morning star is for the bullish one. So the evening star, you're always gonna find this on the top of the market, right? So like I said, we break under support, we get the pullback, we get the lower high, right? We get the lower high retest here at the previous lower lows. We have the evening star at top. Boom, that's exactly where you guys want to enter off. Obviously, once you guys get those rejection, we do see that price remain itself under, right? Remember, you guys always have to wait for price to remain itself under the area of interest. In this case, for sell, if it's for buys, it has to remain itself above it. So like this, literally that simple. This is exactly what you guys want to wait for. Once you guys get all those confirmation, boom, this right here is a good entry signal. This is where you guys want to look for, and that's where you guys can enter the target. Obviously, you guys already know how to target the next zones. Perfect, right? That's the one entry signal that I use. The next one is the opposite of bullish engulfing, which is the bearish engulfing candle, right? So you got the, should have just brought all of this down. All right, so this right here is the bearish engulfing candle. Works the same way as the bullish. Obviously, just the different is just bearish. We have the bullish candle closure, right? And then we have a strong bearish engulfing candle, literally just engulfing the other one, meaning it's above it, right? Meaning for the bullish, it's above it. For the bearish, it's under it, right? So it engulfs it pretty much stronger, right? This right here is another good signal as well to enter the market, right? Once price comes into the area of interest, give you guys those confirmation you guys need, which is right there. Switch the structure, retest, rejection from EMA, retest from structure, candle, bearish engulfing, blah, blah, blah. You guys already know that's exactly where you guys want to enter the market. So that's one. And the next thing that we have is the pattern. We have the M shape, which is obviously the, what is this one? The double top. So double top, you guys already know how it works. Let me just delete this part here so you guys can have a better detail, bro. So the double top is this right here. Boom, boom, boom. Right there's the double top. You got the left shoulder, you got the right shoulder. What do we have here? The neckline. We get the break under it. Simply just wait for those pullbacks. Simple as that. Get those pullbacks, wait for rejection. Price needs to remain itself under it. Boom, boom, boom. You guys get those confirmation. Bullish, you get those candle confirmation. That's where you guys want to enter the market. So that's simple. That's how you guys are gonna trade the head and shoulder, right? It's the exact same way that you guys are trading the inverted head and not the head and shoulder, the double top. Same way you guys are gonna trade the double bottom. Now we have the inverted head and shoulder. What is this one? This is when price creates the inverted head and shoulder. We have the left shoulder, we have the head, we have the right shoulder over here. How you guys are gonna trade this? Wait for price to break under the neckline, right? Break under the neckline, wait for the pullback, enter it, and that's exactly what you guys want to enter the trade. Just as simple as that. So that's pretty much it, guys. This is literally my strategy. Showed you guys exactly how I trade it. It's pretty much a raw video, so I'm literally just showing you guys exactly how I do it every single time. Literally doing it from scratch and just showing you guys all what I wrote down here. Like I said, comment down anything if I said something wrong, if I need to fix some stuff, so obviously I can give you guys a better education the way that I learned from my experience. So in this channel, as you guys can read the bio, it's literally everything that I'm teaching you guys with my experience, right? Like I said, nobody's gonna be right and nobody's gonna be wrong with the market, right? Everyone has their own opinion with the market. If I do see something different from the other one, it's cool. Just pretty much stick what works good for you guys. I just hope this video helped you guys. If you guys need to ask any question, obviously feel free to ask below, and then I'll see you guys in the next one, guys. Peace out. All right, so check this out, guys. So before we close out the video, I want to show you guys literally a great example of switch structure. So with the analysis that I did with you guys, the raw analysis that pretty much I told you guys exactly how I look for my trades and etc, etc, we did not end up getting the trade that we planned for, right? And this is why I tell you guys, whenever you guys are trading, right, you guys have to be very patient, right? Like I explained, if you miss one setup, the market is not going anywhere, so you don't have to jump in right away. The next thing to do after you miss a setup is obviously to wait for another opportunity to show up. So for example, I was looking for sales since we got one confirmation, right? This could have been my first entry, right? Since we broke under this area of support and formed a lower high. This right here could have been my first entry, and I could have made money back into a downside over here, which most likely pretty much I think would have given us like 2%. So if I would have had my stop loss, like I say, I always have it at 30 pips. I could have taken my profit down over here, which would have been 2%, right? So I could have taken that trade. But since I missed this trade, the next idea for me was to take the trade under these zones over here, right? So like I explained, we got the break under here, created a lower high. Now that we broke under, we simply wait for this setup over here, and this is most likely where I will be taking the trade. I explained to you guys as well. If we were trading under this zone, the EMA was also remaining my bad. If I would have gotten the break and retest under the zone over here, the EMA would have been trading above it, which would have been another confirmation, right? And then I explained to you guys the candle patterns and the pattern that I look forward to take any single trade. Now, we missed the first entry. Second entry did not play out at all, right? Then we started having the switch of structure, right? Literally, I explained to you guys how switch of structure works. In this case, we broke above the lower high, which in the past, it was an area of support, which was a higher low, which is now turned into a lower high. What happens next? We break above the lower high, form a new high over here, and what happens here? Forms a new higher low, right? Literally, I explained to you guys. If we break above lower high, right, most likely price is gonna come back, retest it, use it as a higher low, and this is where you guys can start looking for those buy opportunities, right? So we got the break above here, we got the higher low. Currently we are retesting and rejecting it, use it as support. Notice how the EMA is now switching its structure, right? We're trading under it, and now price has broken above it, which is price, pretty much using it as support. We go into the 5-minute time frame, and what is this right over here? This is literally the candles that I look for. We have the morning star, and we also have the bullish engulfing candle, right? So literally how I would have entered this trade was, once we get this bullish candle closure, right, I'll be waiting for the next candle closure, and this is exactly where I'll be entering my trade. So we got the morning star, we got the rejection from the area of lower highs that is currently using it as a higher low, we got the rejection from EMA, literally everything that I look for. This right here would have been my entry above it. And then my stop loss, obviously you guys already know, 30 pips, and then most likely I always target a 1 to 3 risk to reward. But then the levels, you guys could have also used it as take profit. So for example, this right here could have been your first take profit. This right here could have been a 1.6% trade. Overall, my second take profit would have been above here, but in total this trade ended up playing out for 2.4%, right? So this trade was very, very nice. At the moment over here, obviously I would have my stop loss at break even and just pretty much let the trade run. I always go for 1 to 3 risk to reward, which is most likely 90 pips all the time, right? We did secure 2%. I'd explain to you guys 1% I go break even, 2% is where I secure half of my profits and just pretty much let the trade do its thing. But that's exactly how I explained to you guys how switch structure work. This is literally a great example. So that's pretty much it, guys, for this video. Hope you guys enjoy, and I'll see you guys in the next one.